Good morning, good afternoon, good evening, traders from across the globe and you traders from lovely Las Vegas, and welcome to another edition of Short-Term Trading Live with Oscar. For you traders out there, my name is Oscar Carboni. I've come direct from the pits in Wall Street, spent most of my adult life down there, almost 30 years now I've been in this business, spent a lot of it down on the trading floors, and I've come off the exchange out of those pits to teach you traders the tips, tricks, and techniques that I've learned to perfect down on Wall Street. Now traders, let me tell you something. I don't care what your trading experience is. Nobody gets experience like you get when you trade down in the trading pits and spend your adult life down there. When these old timers put their arm around you and make you one of their proteges, there is no better learning than that. That is how I spent my younger part of my career learning. I've studied at the New York Institute of Finance under John Murphy, who was my professor. I've done a lot in this business, and now traders, I have 800 YouTube videos that show everyday techniques, tips, and tricks to help you traders gauge market movement going forward. So what do we have for you today in this show? Let me just say this. As we all know, futures trading is extremely risky and can cause substantial financial loss. If you do not understand this game, if you do not have risk capital to lose, and if you do not recognize that a protective stop is your best friend, you probably shouldn't be trading. But for you traders out there that are trading, what we have going on now is this. First of all, let me just say this. Happy Thanksgiving to everybody here in the U.S. I hope your turkey was as great as mine. I really love this holiday. It's my favorite meal, and I hope you've enjoyed yours. Now, let's get down to business. Here's what I'm talking about, traders. We have a situation taking place right now where the U.S. stock market is coming down, and a lot of traders out there are panicking, thinking it's the beginning of the next big crash. It's a redo of 2007, 2008, 2009. Watch out, look out, because Europe's having trouble. We're going to be wiped out. And I'm here to say this, traders. In this show, I will show you some proof that yes, in the short term, we are bearish, and you have to watch the downside short term in U.S. indices. But there is also loads of technical proof that the upside is still solid and that the markets will gain their footing again and we will move forward. Now, what most of you traders who know me, especially my fans on YouTube, and there are tens of thousands of you that watch my videos almost every night, most of you know that I am a really good technical analyst. I mean, I wouldn't have this crowd around me if I wasn't good at my craft. So that's, we know about that. What you may not know about me is this. I'm also a very well accomplished fundamentalist. I understand the fundamentals behind markets. I completely understand when the Fed is making moves. I know what the twist is. I know when they're doing a QE2 or 3, what it means. And I know when Europe does something with their interest rates, how it should interpret return results here in our country. With that in mind, I have some things I want to talk to you about. Again, short term, yes, we're worried about the downside. Slightly longer term, a few weeks, a few months ahead, we're looking for the upside. Traders, I spend a lot of my time reading all the financial newspapers, and I scan through whatever stories that I know are proven factual, and I do a lot of fundamental research as well as my technical research. And here's what I learned over this weekend going through all the financial newspapers. In the United States, GDP, gross domestic product, it has grown between 2 and 2.5%. While not fanatical growth, it is still the best growth in over a year. So you have GDP in the U.S. finally starting to move higher and higher each month. You have labor markets that are finally slowly beginning to bottom, if not improve a bit. No less. You have car companies that have absolutely regained their footing here in the United States and more. Banks in the U.S. are now flush with cash. Concerning Black Friday, right? More things I'm reading in the paper that tells me a few months down the road these markets go higher. Concerning Black Friday, if you do not know what Black Friday is here in the United States, the night of Thanksgiving, which is Thursday this week, the night of Thanksgiving, the markets, or I should say the markets, the big stores in the United States start what's called Black Friday, right? That's when everybody who wants to buy Christmas gifts here in the United States, they rush out from Thursday night straight through Friday. It's called Black Friday. And a lot of the economic indicators are geared or based around Black Friday, right? Black Friday, concerning Black Friday, the chairman and founder of America's Research, as seen on the front page of Investors Business Daily this weekend, Mr. Britt Beamer states, and I quote, "We are going to have the biggest Black Friday in our lifetime. The biggest shopping day in our lifetime this year is expected and predicted by the same company that does this prediction and projection every year. America's Research expects a record 54% of all Americans who shop, or 54% of all Americans who shop for Christmas will shop before 6 a.m. this Thursday night, before Black Friday even begins. They expect 54% of us lunatic shoppers to be out there shopping. So, if you have GDP growing, if you have car companies doing better, if you have banks flush with cash, and you have things like research departments stating that this will be the biggest Black Friday we've ever seen, you have to recognize that going forward, we're going to see things like that in the stock market. What else did I read? U.S. leading economic indicators, the LEIs, rose 0.9%, which is the best performance in 8 straight months. Most U.S. economic LEIs rose. However, the big surprise is they were led by housing permits. Imagine housing permits in the United States leading the economic indicators higher. And that brings me to tonight's topic, about tonight's video, about this show, and about what I'm seeing going on out there in the United States. Speaking of housing permits, I have to ask you traders a question. Have you seen changes in your neighborhood suddenly taking place in real estate? Have you noticed real estate changing in your neck of the woods? In other words, have you noticed real estate starting to pick up? Houses actually starting to close? People out there shopping a little more? Have houses on your street in your neighborhood gone and sold now that have been up for sale? Because that is what I'm noticing all over Vegas. In fact, I'm seeing a huge improvement in real estate in Vegas as well as New York City. A couple of examples. I have a property on Staten Island, New York. It went up for sale. I had bids immediately on it. It may actually be sold. It just went up for sale. There was a house for sale on my corner in Vegas. It sold in 14 days. It was listed for 14 days and sold. I see building taking place all over Vegas lately. Are you seeing this in your neck of the woods? Traders, if you don't believe me, take a look at this short clip, because we drove all over Vegas looking for construction. We didn't have a plan. We didn't have a mapped out route. We just drove around with a camera, and take a look at what we see.
Well, no, it may not be water park season just yet, but the heat will be back in the valley before you know it.
And there's good news this morning. A couple of new water parks are in the works. Finally, Fox 5's Dave Lawrence is live at Fort Apache in Warm Springs to explain all the future fun. Dave.
Hey, good morning, Heidi and Dave. Yes, a couple new water parks could be in this area. And, of course, if you're from Vegas, you realize the heat of Vegas. You'd think there'd be some. But it was back in 2004 when Wet n Wild actually closed along the Las Vegas Strip, along the north end of the Strip, as a matter of fact. But there are two new water parks planned for a Memorial Day 2012 opening. Developers with Splash Canyon Water Park are announcing more details about this park on the southwest side of town at 10 o'clock this morning. Park organizers will be on hand, where at this 10 o'clock release they'll have more details, but they say 500 new jobs will be created by the park and a season pass system will be going on sale very soon. SPB Partners are the owners and developers, and they grew up in the Las Vegas area and say they want to create a fun place where Vegas families can come together and create lasting memories. Another water park is set to be built between Boulder Highway and the 515 near Galleria. According to the Las Vegas Sun, this 22-acre water park is being developed by Dream Park International. Now, construction has not started on that site just yet. They do have some construction, as you can see behind me at this location, but they both say that they'll be open on Memorial Day of 2012, but it seems unlikely that the location in Henderson will be ready, with construction not even starting there. But they do have a little bit of activity going on at this location. They'll have the 10 o'clock announcement a little bit later today, guys.
Very good.
Do you think they'll bring back the Dersuka and the Black Hole and those cool slides?
Or the lazy river that goes around? Yeah, hopefully.
They have plans for all of that fun stuff.
Good stuff. Thank you.
Okay, traders, did you see that clip? Now, again, we didn't have a plan when we went out. I said, you know what, to my camera crew, grab your cameras. I'm noticing construction all over this town. You have to come with me and show me. We're going to show the world that that is what we're seeing. Now, let me tell you something. Vegas was tied between first and second place for the most foreclosures in the United States the whole time the United States real estate tanked. If Vegas real estate is turning, I assure you it's starting to happen in your neighborhoods. Now, listen to this. Furthermore, Wall Street Journal this weekend reports Blackstone doubles down. What does the title mean? Blackstone is a huge investment firm. They have doubled down their bet. Private equity firm set to buy another $800 million worth of commercial property. Now they already have $41 billion worth of real estate holdings, and they are aggressively buying more. REITs, real estate investment trusts of the commercial and residential nature, have had dramatic rallies this year. Have you noticed? This, my friends, amounts to a recovery on the horizon, not more recession. Here is where we stand. Right now, the U.S. is really showing signs, overall picture, that it has gotten back on its feet and would like to move higher. For the last 2 years, I have been professing in many of my YouTube videos that this is what was going to happen. The United States would start to come out of its recovery, and Europe would hold us back for 3 to 6 months. Why would I think that? Because I have stated in dozens of videos over these last 2.5 years that when the crisis began here in the United States, the economic crisis at the end of 2007 into 2008, our U.S. Fed immediately flooded the markets with money, lowered interest rates as quick as they could, filled the banks' coffers with cash, gave money to car companies, and firmed up the crash that was taking place in the United States. While the Fed was doing that here in the U.S., flooding the streets with money, giving money to banks, and lowering interest rates feverishly, do you know what Europe did for 3 straight months? They raised interest rates in the face of the disaster taking place in the U.S. What I explained to all my fans while that was happening was, a couple of years from now, when the U.S. tries to recover, Europe will still be in bad shape for 3 to 6 months and will hold us back. What you are seeing in the markets right now amounts to nothing more than Europe holding us back a little bit, but they are certainly not going to stop the U.S. recovery. So we are short-term bearish, longer-term bullish in U.S. stock indices. And traders, with no further ado, let me show you some charts. Let me show you exactly what I'm talking about. Follow me into my chart laboratory.
Making money in the markets is not an easy thing to do.
That's why I chose Metastock, the award-winning analysis and data package.
Metastock uses technical analysis, good solid information.
Not just hunches or guesses. This helps me make better trading decisions.
I find the best trades and I can decide when to buy and when to sell.
With Metastock, I trade more confidently.
And that's helped me be more successful.
Go to metastock.com/TG7 right now to get your free 30-day trial of Metastock software.
I love Metastock.
Okay, traders, we are looking at the Dow Jones Transportation Average Daily Bar Chart, and we are going to do the long and short of it. Let's go with the short first. In other words, the short term, let's look at that first. This is the Transportation Average Daily Bar Chart, deemed the leader of U.S. indices. As we can see on the daily bar chart, it failed miserably at the 200 bar moving average. This is the 200 bar moving average. The chart hits it, drops, hits it again, fails miserably. Then it creates a bear flag, which is a sell signal, and from the bear flag we break down into a parallel channel, and this whole package is bearish going through Thanksgiving and for the rest of this week. That's a pretty bearish looking formation. So the short-term leader is pointing us towards the downside if you're trading day by day. Then we go look at another one of our leaders, the NASDAQ. It failed at the 200 bar moving average, failed miserably, broke down, and now has formed its own parallel channel. Once again, the whole thing here is very bearish. Once again, looking at the short-term view, the day-by-day trading, we have the E-mini S&P. It created a pennant. It failed at the 200 bar moving average and broke down miserably, creating a parallel channel on the way down. Another bearish look. So short term, you'd have to look at this and say, yes, if I was going to be trading tonight and tomorrow and the next day, likelihood is the downside. But we don't always just look at short term. We keep the long term in mind. And with that in mind, traders, Dow Jones Transportation Average once again, but now we are looking at a weekly bar chart, and the picture is completely different. When you look at the weekly bar chart, we are above the 200 bar moving average and well above it, in fact. And we are coming back down maybe to test it, but we are also inside of this wonderful parallel channel. So we are above the 200 bar moving average on the weeklies. We've stayed inside of this parallel channel ever since 2009, March of 09. And we're still in the channel now. So when you look at it in a longer term view and on a weekly chart, the damage is not so bad. In fact, it looks to me like it's just a pullback in a rather bullish market overall. Then we go take a look at the NASDAQ on a weekly chart. You will see that the NASDAQ is well above the 200 bar moving average and is inside of its parallel channel, and in fact looked pretty strong here. So if it comes down to the parallel and holds, there's nothing wrong with the pullback as it works its way higher. So once again, when you look at the weekly aspect and go out to an opinion that goes out for a few weeks to a few months, suddenly the charts do not look so bad. What I am showing you basically is this little downturn is Europe holding us back while we try to recover, and that's what I think the U.S. is doing right now. Then if we look further, we have the E-mini S&P. The E-mini S&P on a weekly bar chart. As you can see, it is rallying and staying inside of its parallel channel. It is above the 200 bar moving average, and that's what's so important, that the weekly charts are all above the 200 bar moving averages. And look at how close the S&P is to touching that 200 bar moving average, right? Now here's what's interesting. When S&P is going down, the dollar is going up. And when the dollar is going up, the S&P is going down, right? We know that that's how it works, and vice versa. If you take a look at this chart, this is a weekly chart of the dollar index, and opposite of what you see in U.S. indices, the dollar index is below the 200 bar moving average, and the dollar is getting close to touching it, and it looks to me like the dollar will run up and hit its 200 bar moving average just when the S&P comes down to hit its 200 bar moving average. The S&P will hold and break out, and the dollar will come back down. And I believe that's why dollars are under the average heading up to it now, while S&P is above the average heading down to it at this point in time. So I think what you're looking at is a bit of a crossfire, and what you're going to get out of this is dollars once again breaking back down, pushing stocks higher into next year. And you also have an upright head and shoulders on the weekly bar chart in the dollar index, and that usually is a bearish signal overall, traders. So there's my technical argument for why short term we're bearish, but slightly longer term the charts are still healthy looking, the markets are constructive looking, and we should be pulling higher for the first and second quarters of next year.
Making money in the markets is not an easy thing to do.
That's why I ordered this free book and demonstration disc from Metastock.
Metastock uses technical analysis, good solid information.
Not just hunches or guesses. This helps me make better trading decisions.
I find the best trades and I can decide when to buy and when to sell.
With Metastock, I trade more confidently.
And that's helped me be more successful.
Go to metastock.com/TG8 right now for Metastock's free demonstration disc and a free book on trading strategies.
So traders, you've seen the charts, and there's my technical argument for why, yes, short term we're bearish, but longer term we are bullish. Now listen, the facts that I was reading to you and talking to you about before the chart segment, they are real, they are tangible, they can be researched, and let me tell you something, traders, from my 30 years experience, when you see indicators starting to point towards the upside in a month like November, come Jan, Feb, March, that market follows the leader. It's like the Pied Piper. You see the indicators going, I assure you it will show up in our markets. Now, again, if housing starts and all these other indicators that I've told you about in the United States are getting more rosy, I assure you it will show up in market pricing as we mark some time. Now again, traders, you will find Europe holding us back, and I think the long and short term picture I just showed you shows you both things. The short term we're bearish, as you can see with the daily bar charts, we're below the 200 bar moving averages. However, when you go and step this out a little bit and you look slightly longer term, what you then see on the weekly charts is that all we're doing is pulling back to a staging area so that we can move higher again. That is what the technical picture looks like long term right now. However, we are day traders and we deal with the short term picture every day. And the short term picture is you gotta be on the short side for now, but be nimble and do not fall in love with the downside of this market, traders. Let me say it again. Do not fall in love with the downside. We're coming down now. It does not mean we are going to crash. We will stabilize and head higher based upon the economic indicators we just discussed and the chart segment that we just went through together. Now, I want you to go home and do your homework. I want you to see what that dollar index looks like, because traders, let me tell you something right now, in the world economies, the dollar is king. It wears a crown. If the dollar moves up, commodities pull right back down. If the dollar moves down, commodities head right back up. You see the stock market, it's almost tick for tick opposite the dollar right now. The whole world is keying off of the US dollar. And if US dollar continues to move higher, stocks feel the pain a little bit. But if the dollar cools off up here like we expect it to do at the 200 bar moving average and starts to back off, then you see the stock market move higher. That is what we do expect in the intermediate term going forward. I hope you do your analysis and you see the same picture I'm showing you. Traders, if you have any difficulty at all reading your charts, come on down to my site. It's livewithoscar.com. Jump into my free trading chat rooms where I run those chat rooms. I am at the helm and I can help teach you technical analysis, explain these formations to you, better explain the chart segment that you just seen, and further your education. Traders, the site is free. It's livewithoscar.com. And I am there to help each and every one of you traders get better at this game. I know the game is not easy, and I know reading charts is not easy, But if you can learn to read the charts properly and then stick to a trading plan each day, like us professionals from Wall Street know how to do, I assure you it's going to help you move forward in your trading. It'll give you confidence. It'll teach you how to trade a plan and then how to plan the trade. It will teach you all the necessary steps that you need to be a much better trader. It requires professionalism, it requires rules, and it requires a mindset that we can more than help you out with if you come on down to livewithoscar.com. Now traders, another thing you may not realize is at livewithoscar.com, we personally issue trading recommendations, where to buy, where to sell, where to place protective stops, where to take profit if we get blessed by profit. If you would like to be part of that, simply come on down to livewithoscar.com, grab a membership, and join one of our services. We have the Platinum and Gold service there to help you with trading recommendations. Now, if you like the analysis that I've brought forth to you in this video, I'd like for you to try to emulate it and grab yourselves a copy of Metastock. It's the best trading program I've ever used. I do my analysis on Metastock, and I hope you traders do your analysis on Metastock. Grab yourselves a copy. Simply go down to metastock.com/TG7 and you will be able to get yourselves a version. It's inexpensive and quite professional. Traders, remember this. At all times we get emotional when we're trading. Remember that if you place your stop, it should help keep your emotions at bay. When you place a stop, it's like writing a check. If they cash that check on you, so be it. That is why you wrote the check to begin with. If you place a stop, that stop is to keep your emotions at bay, because now if you bought something here and you placed the stop right there, you know what your risk is. So I always tell my traders to keep their emotions out of trading. And one of the best things you can do to help yourselves with keeping emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stop soaring. Emotions are out. Yeah. Thank you so much for tuning in. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.